Hi, fellow traders. I'm making this video to share my non-farm payroll trading plan with you. After comparing last two releases of PMIs, services PMI and manufacturing PMI, I found out that employment component in manufacturing PMI did not improve, but employment component in services PMI has improved from 45.2 to 48.2. Since services sector is the biggest sector in the US economy, which is almost 75 to 80% of the GDP, unemployment component improvement in services PMI should be considered more impactful factor in the job sector. If we look at JOLTS, so JOLTS, I'm not talking about the last release of JOLTS jobs opening. We must look at the second last release to understand, because this is a leading indicator. And jobs opening are filled in a matter of months. That's why it's a leading indicator, and the release of this month may be seen affecting the job sector maybe in the next couple of months. That's why I looked at the second last JOLTS jobs opening. It revised from 6.88 million up to 6.92 million, which shows improvement. Even last release has beaten the forecast, because it came 6.87 million versus uh, forecast of 6.86 million. So if we together talk about JOLTS jobs opening and employment component of the PMIs, I don't see any problem for the job sector. On the other hand, if we look at the PMI and both PMI data itself, then ISM manufacturing PMI came around 52.7, pretty close to the forecast into expansion territory. Services PMI 53.6 versus forecast 53.7, again in expansion territory, very close to the forecast. And if we look at new home sales, this has beaten the forecast, which was 652. It came 682. ADP non-farm payroll also came close to forecast. Forecast was 118K. It came 109K. So if we look at the overall uh, picture of recently overall economic picture for the job sector, according to recently released data, I don't see a problem for non-farm payroll. That's why I think today non-farm payroll may come in line with forecast. However, if we see a deviation of greater than 50K to either side, we probably can have a trading plan. So let's talk about uh, trading plan for both cases, bearish and bullish. Before we talk about bearish and bullish, we are getting to more data. One is average hourly earning, another one is unemployment rate. Average hourly earning is going to play a big role. However, unemployment rate will be not very significant today. So if we see 0.1% deviation in average hourly earning, it will be similarly impactful as 50K deviation in non-farm payroll. So if we see negative deviation of 50K in NFP, negative deviation of 0.1% in average hourly earning, it will be considered significantly bearish for US dollar. If we see any of these two data same as forecast and one deviating to the negative side, by the numbers I mentioned, by the deviation I mentioned, then it will be considered bearish. On the other hand, same thing can be bullish or significantly bullish. 50K positive NFP is bullish, 50K positive NFP along with 0.1% better than forecast average hourly earning will be significantly bullish. So bullish versus significantly bullish, bearish versus significantly bearish. This is something I have told, and for my definition of bullish, significantly bullish, bearish, and significantly bearish, I am going to show you a trading plan on the chart directly. Here we are on USD JPY chart, and this is something we are going to trade in case we get either bullish US dollar in US dollar or significantly bullish US dollar. So in case of bullish, we will get 157.80, something around this 157.89. Yes, so we will get this previous swing high. And if we get significantly bullish, then we will reach this 50-day moving average, which is giving us a target of 158.67 right now. Day before yesterday, if we didn't get a news from Axios saying that there may be one page memo, there may be an agreement between US and Iran. If this didn't come day before yesterday, USDJPY may be trading, would be trading something around 159 by now. But actually, you can see this was the move to the downside, which was continuation of the downward move after Bank of Japan intervened. So Bank of Japan intervention could have faded if we didn't get that news from Axios day before yesterday, and then this pair was already going gradually to the upside and could have reached 159 area. Anyway, that didn't happen. However, if we look at the whole movement of USD since beginning of the April, Japanese yen has been the smallest gainer if we compare euro pound and Japanese yen and their gains against the US dollar. Euro and pound uh, have been the biggest gainer. So in case of bearish US dollar today, we are going to buy either Euro USD and GBP USD. But what we are going to do between these two can be understood by going to Euro GBP chart. So right now, if you see at Euro GBP has been falling down since the beginning of April. However, it has bounced back from the support area. This was swing low, this was swing low, and this is the recent swing low. And current bounce shows that the euro may be at least an intraday gainer against pound, which is why if we are going to trade NFP today, it's much better to buy Euro USD instead of GBP USD in case of bearish US dollar. All right, so let's go to Euro USD chart and see what probably we can get. So in case of bearish US dollar, we are going to get the swing high, which is the nearest resistance, something around 1850. On If we get significantly bearish US dollar, then we will get this something around 127.2% extension of the recent downward retracement. I'm talking about this downward retracement. So this is giving us a target of 1900. So that's all in short. Thank you for watching.